All right, guys. So just want to talk about this fractal. Definitely not saying it's playing out because, you know, today in today's society and all the rest, you know, the Fed going to let the stock market crash like it did back in the 2020s, like it did back in 1929, 1928? My response to that is no, the Fed are not going to let that happen. But, you know, could somehow the Fed lose control or something? Yeah, I don't know. I mean, I really don't. It's going to take a big thing to send the stock market down. 80. Let's measure that actually, just for the record. Yeah, 90%. The stock market crash of 89%. Is that going to happen in today's day and age? You know, I highly doubt it. Right, that's my honest answer on that. But the fractal is very, very interesting. We can see, you know, there was a long lead up. In the choppy lead up as you get safely above moving averages. You know, you had the big move up, the drop, the big move up again before the second drop, and then it moved back up, and it's almost identical. Then, like you can look here, you get the bull market. Let's. I know everybody can see it, but you know, you get a big, you get the lead in, right? Okay, you can see you get the lead in. You get the big move up, right? You get the big move up. You get the crash. You get the crash. You get the big move up. You get the big move up. You get the big move down. You get the big move down. You get the bull flag type structure where it moves up, consolidates. You get the bull flag type structure where it moves up and kind of consolidates with a little bit more slant there, but it's almost identical. And then price breaks out of the previous highs. Then obviously price goes parabolic, right? Price goes parabolic. You can see here on the S&P 500 and today's action, the price goes parabolic. Right, so the similarities are almost identical. They are almost identical, and you cannot fault this for a fractal. It's an amazing fractal. Now, after that, what happened? Right, if we zoom in now to this, after seeing the lead up and the move, what happens? Well, you get the initial crash. This initial crash is a large crash. Of course, back in the day, it was a lot worse. We can measure that. You know, that's a 47% crash. This is less, 25% crash. Now the Nasdaq and stuff did drop more. The Nasdaq was down 30-something%. But you can see where price dropped and then where price bounced to was a pierce above moving averages. Okay, we have now got to above moving averages. This is the failure location if this is going to fail and roll over. From this point, you can see here that there was 50 days. Is that a year? What is that? Yeah, 57 bars. This is it's a 2-week chart. Sorry, that was 2-year drop. That was a 2-year drop. Is this going to have a 2-year drop, something similar, and drop 90%? You know, I don't think it's going to be that extreme. Do I think we can roll over? Yes. A lot of people are completely bullish on the market. Now, you know, I can always be wrong. Of course I can be wrong. But what a lot of people don't understand is that we are having a red year here. There's no way this is going to pop up and flip green. People on Twitter are talking about this popping up and flipping green. It's you know, it's just not going to happen. I'll put my foot down and say that it's not going to happen. There's no way that this year is going to flip green. If it does, it's the craziest market action I think I've ever seen. Actually, COVID flipped green. So, you know, is it possible? Of course it's possible. It is very, look at this. This was the craziest market action I've ever seen. Look at this flip green. But they printed, many trillion did they print in this? They printed like 3 trillion. We have not started printing yet. Now, if we start printing, yes, this will flip green. So I take that back in what I just said. If there's no, like, the raising rates and stuff have still not taken effect in the economy. And everything else. So as they take effect, you would imagine in theory this should drop down again, right? That's the theory behind it. It should drop down again. But if the Fed are going to start to print, well, all bets are off. This is going to new highs. Okay, so I should make that very clear. But at this point in time, we have a very, very similar fractal to back here in the 1920s or whatever. And what happens with parabolic moves? Well, parabolic moves love to drop 70 to 80%, 70 to 90%, I should say. Parabolic moves love to crash. And personally, I'm not too sure if the Fed's even going to let the stock market crash. When has the Fed ever even let it crash? Look at COVID. They printed like, if they were ever going to let the stock market crash, it's down 30% and they printed like 3 trillion. Like, it's insane, because the stock market could easily have been let crash here, right? Because look, we could have crashed back down to, well, we did crash down to this low, I suppose, but it could have easily come down here for a full perfect retest, and then the market would have all of this time to work its way back up, but instead they completely reinflated the bubble. So it kind of shows that the Fed are not going to let the market crash 90% or whatever, and they will step back in to pump the market further. But I truly believe that this will not flip green if there is no money printing. The Fed themselves, Jerome Powell, he talks about how the effects have not actually filtered through to the economy yet. So is that him indicating that the markets could roll over again? The other very important thing that I have picked up on what he was saying is that the labor force is so strong in the USA that they do not have people to fill all the workspaces, to fill all the free jobs. They don't have enough qualified people, or I don't know, qualified, but people to fill those jobs. That's a sign of an extremely strong economy. It's a sign of an extremely strong market. So what I'm saying is, can that strong economy, can it actually weather the storm and eventually go higher? All I want to say is, at this point in time, next week next month, this is where it's tricky, because next month is the Ethereum merge, okay? But if the Ethereum merge was this week, I would be saying, yes, this is a bloody short, because the Ethereum merge and the stock market is into a topping out phase. But the Ethereum merge is not for another month, kind of implying that the crypto market can maintain strength for another month. But if the stock market flips red here on a new 2-week candle, like, we can look here, how does the stock market like to reverse? Well, the stock market likes to have a fake pump higher, drop down, flip red, and reverse. You can see it happened numerous. Let's just look at this very quickly. How does this turn bearish? Well, you can see here, you can see it pop up a bearish stop hunt. You can see a bearish stop hunt right here. You can see a bearish stop hunt right here. You can see a bearish stop hunt right here. This did go lower at one point. It's just because of a big green candle, but it did flush lower at one point. This 2-week was also a bearish stop hunt right here. This 2-week was also a bearish stop hunt right here. This was also a bearish 2-week stop hunt before a flush lower. This was also a bearish stop hunt before a flush lower. This was also a bearish stop hunt before a flush lower. The top of the market here was also a bearish stop hunt before flipping lower. I mean, do I need to go on and on and on and on? This one was the first one that was not a bearish stop hunt in all of these dips, and I missed this one. Let's draw it in, because they're all important. Look at this bearish stop hunt before a flip lower. This is the first one. Look at this one. This is a bearish stop hunt right here before flipping lower. This is the first one that we never had a bearish stop hunt. Okay, so look at all of these. These are all bearish stop hunts, right? And then flip lower. This one was not. Okay, that was not. We got to call it when it's due. But I'm not going to go through the whole lot. But they're significant, and they happen quite often. Look here, when you popped up above all moving averages, you got a bearish rejection stop hunt, and then the market continued. Look what happened on the highs of the market in 2007. We had a bearish stop hunt on a 2-week, and then we dropped. Okay, we had a bearish stop hunt right here at the top of the 2000 tech bubble, and then we dropped. We had a bearish stop hunt right here for continuation. We had a bearish stop hunt right here for continuation. We had a bearish stop hunt, chopped about there. We had a bearish stop hunt right here for continuation. So if if we do understand that signal is very prominent and happens very often in the markets, we have finished extremely strong here, implying more upside in the market. But if that upside turns around and fails and has a bearish stop hunt, we need to be extremely careful on all of our positions. I mean more short-term positions, but you know, if you're still willing to accumulate on dips long-term, well, of course you hold your long-term positions and add lower. If I just flick back in 1929 or whatever this was, you can see right here as well that we had a bearish stop hunt right here before the drop. We finished pretty strong. We came up, we had a fake move higher on Monday. That was on a Monday. Well, it's a Monday or Tuesday, and then the market dropped down, flip red, and away we went. So it is just a period that we need to be very, very careful. I think crypto still looks fairly good, but sometimes when it looks good is when they want to flush you. So anyway, 11 minutes. I didn't mean this update to be so long, but it is important, and we need to watch this like a hawk on Monday.